All right, good afternoon, everybody. How we doing today? We coming through loud and clear, Craig? All good to go? Okay, great. Well, welcome everybody to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com, and we do these webinars throughout the month for you to give you some free education on Nadex and who is Nadex and what is Nadex, what are the products they offer, some different ways to trade them, and just some free education to help you really understand the ins and outs of Nadex binaries and spreads. Hello, Mike. How you doing, Mike? Ron, good to have everybody on here. Today we're going to be talking about Nadex binaries. We're going to talk a little bit about binary pricing and breaking down the binary, and it's kind of just the first phase in a few other upcoming webinars. We're going to be talking about different ways to trade binaries. We're talking about using the binary strike ladder to manage trades, and a little bit of a step back to some basics here as far as how a binary works and what causes a binary to move in price and what kind of price movement you can expect. So let's get moving here. Let's knock out our disclosures. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Example used are not a recommendation to buy or sell or a solicitation to buy or sell futures, options, bonds, binaries, or spreads. Any trade examples you see or entry of a trade is simply just me helping express an idea or showing you how to physically place a trade on the Nadex platform. It's in no way a trade recommendation. And information here in this webinar is for informational and educational purposes only. And like I said, I'm with apexinvesting.com. Apex and Nadex, two complete different companies. Nadex is an exchange. Apex, we're an online company of traders helping traders. We've got over 20,000 members. We're traders just like you. We've got different strategies and systems. We focus a lot on risk management and probability. That's why we love the characteristic products of Nadex. I've been with Apex now as head of operations for about 3 years. And like I said, I'm a trader just like you. I trade Nadex, binaries, and spreads every day. And for those of you that are brand new to Nadex, and even those of you that might have been around a while, I want to get a little bit of information from you here. And just so we can kind of get a sense of, what type of information might be helpful to you, what type of experience do you have. So I'm going to pop up a little poll here and help us out and give us a little feedback here. And I've got three questions for you here that kind of want to know from you. And how many Nadex webinars have you attended? If you can go through there and just select one of the options and hit submit. And if any of these answers don't quite fit, feel free to type an answer into the questions and feedback box there. But just want to get an idea of, is this your first time on a webinar, or are you brand new? Are you a veteran with this? How many of these have you attended? All right, perfect. I appreciate that. Got that. And also, what's your experience? How long have you been trading with Nadex or been trading in general? Are you a beginner? You have some experience. You've got a decent handle on some of the basics and ideas of how things work, but you're still in the learning process, or you're very experienced. What that gives us some good idea of what type of information to cover with you here. It kind of helps me get an idea of how to gear some of the things that I want to get across to you today, and so on. All right, I appreciate that. And one more here, just some feedback here. And this one in particular, if one of these particular answers don't quite fit, feel free to type it into the questions box here. Okay, what topic would you like to see most on the webinars? If you've been with us, you know that we cover all kind of different topics, everything from very basic stuff to trading strategies, to advanced strategies, to market analysis, psychology, mentality of trading. We try to cover a little bit of all of it. And sometimes it takes us a few months to kind of cycle back through and retouch on certain of these subjects. So just some great, want to get some feedback from you. What do you guys like to hear about? What do you feel like you need the most help with, so we can kind of gear some future things towards that? And again, anything else that you want, in in particular, feel free to pop it in there into the questions box. We can see about getting on the list. So thank you very much for your participation there. I appreciate that. That really gives us some good feedback. And a couple other things, we're talking about what you guys want to hear about on these webinars, these free education webinars. I want you to make sure you're taking the most advantage of all of the free resources to you. If you hop on over to nadex.com, some of you already have a demo account, some of you have a live but not a demo. I think it's a great thing for everybody to make sure they have a demo account with Nadex, okay? And if you hop on over to nadex.com, you can go right here to Trading Platforms. And under the drop-down box here, you can go to Demo Trading Platform, all right? And Nadex will give you a $25,000 simulated demo account, all right? And it works just like the live account does. All you got to do is select a username and fill out some quick information and hit Open a Demo, okay? And in just a few moments, you'll get a temporary password emailed to you. And then all you got to do is just hop on and log in with your temporary password, and you can log into the demo platform. And once you've done that, you can go right up here to My Account, and you can go right here to Settings and Password. That'll let you change your password to whatever you'd like to change it to. All right, something easy for you to remember. You don't have to just permanently use that demo temporary login. But the Nadex demo is a great place to practice in. Even if you have a live account already, grab yourself a demo account. If you're a binary trader, demo some spreads. If you're a spread trader, demo some binaries. Anytime you're practicing with a new strategy or system, make sure to utilize the Nadex demo account to master that strategy or system, work out all the kinks, get your rules down in demo before you switch over to your live account and using your live money. So again, take advantage of all this free education that Nadex provides and the free tools. Also, speaking of free education, if you're here on the Nadex site, you can go right here to Learning Center, and you can go right here to Webinars. Okay, this will show you all of the upcoming webinars, so you kind of know, what subject matter is coming up and what day and times, and take a look at, what's coming up and get registered for that. You also go right here to Learning Center Webinar Archive. All right, these are some of the past webinars. So if you've missed anything, or if you're a newbie and you want to go catch up on some things, go right here to Filter by Presenter. Click down and find us right here, Apex Investing Institute. And you can go back and watch, all kind of different webinars that we've done on, various ways to trade Nadex binaries, Nadex spreads, some advanced strategy stuff. And you can even go back here. If you're brand new, go to page 2, and you can scroll right down here, and 2 webinars I want to point you to, okay, is right here, Basics of Nadex Spreads and Nadex Binaries 101. If you're brand new and you're not even sure exactly how binaries or spreads work, possibly certain things on this webinar or other webinars might be a little over your head, but just stick with us, try to follow along. And then go back through and you can watch these 2 webinars right here. They're both kind of hand-holding webinars of, hey, let me take you by the hand like a 5-year-old, walk you through exactly what is a binary, exactly what is a spread, how do they work, how to use the Nadex platform, and so on, okay? So great information to take advantage of there. And by the way, guys, right here, when you go to log in to your account, whether it's your live or demo account, if you're a scatterbrain like me and you got a million things going on in your head and you forgot, well, what is my password, or what is my username, or wait a minute, did I have a different one for demo than I did for live? If you can't get in, all you got to do is just right here, just click Forgot Your Login Details, and as long as you remember information, it'll ask you, you can click it and it'll send you an email and get you up and going. Okay, and that way you don't have to wait on a phone call or wait when you have time to go look it up or figure it out, or hop on the phone or do whatever. It's just right here for you. Everything you need is right there, very accessible and easy for you on the Nadex platform. Okay, so thanks very much. We've got some great feedback here from you on some of the different subjects, so I appreciate that. Keep them coming. All right, so today's topic, we're going to talk a little bit about Nadex binary pricing and breaking down the binary factors that influence the binary price, and factors to consider when you're analyzing exactly how a binary price can change, okay? And we're not going to be covering a lot of the, basics today of basic binaries. Again, I just showed you where you could go to get some of the basics of binaries there. But just in a nutshell, and let me kind of lead into our next section here. Let me pull back up the Nadex platform. I'm going to pull up the 20-minute binaries, and let's pull one up on, let's say the Dow, okay? So just real basic, what is a binary contract? Well, each different one of these you see here in this list is a different binary contract. Each one of these prices you see, 2660, 2656, 2652, each one of those is a different binary contract. Let's just click on one here. All a binary contract is basically a statement. This contract states that the, okay, somebody says my screen is not showing here. I think we might have a little bit of a delay or something going on. Let's see. Wonder if we, all right, yeah, looks like we're got some kind of delay here. Everybody can hear me okay? Is audio coming through fine? Okay, so audio is good, just video is delayed. Okay, let's see here. Just 1 second here. Yeah, it looks like, give me just 1 quick minute here, guys. Yeah, everything on the internet, my browser, and the Nadex platform is working fine. Looks like GoToWebinar here is stuff is locked up. Let me just try one thing. Hold on. Okay, how's that? Now we're good? Okay, there we go. Just had to reset it there a little bit. Okay, so like this binary contract right here, simply a statement. This contract states that the Wall Street 30 will be greater than 2648 by 120 today. That's it. The statement says it will be greater than that. So it's binary, true or false, yes or no, 0 or 1. Will the statement happen or will it not happen? And if I think that statement will happen, then I would want to buy this contract. If I think that statement, or whichever contract I choose, if I think this statement is false, I would sell the contract, saying no, that statement will not happen. It will not expire greater than that. And in a nutshell, that is what a binary contract is. At expiration, a binary contract is either worth 0 or 100. So depending on the price you buy it for over here or sell it for over here, at expiration it's worth 0 or 100. I want us all to take a minute here and look at the time we have till expiration. We've got 4 minutes left here, okay? I want us to pay attention to this binary contract right here, okay? I'm going to tear this off, and to this contract right here, I'm going to tear this off, okay? And I just want to take a minute. We might have a little bit of a lull here, but I want us to watch these two. This one right here is at 21 and 29. This one's at 65 and 74. And I want you to see something here. As we get closer to expiration, okay, I want to spend a few minutes talking about time to expiration. And I want you to keep a quick eye on this. All right, so over here we're at 72 and 73. Here we're at 18 and 27. The closer we get to expiration, I want you to see how fast these move, okay? I'm actually going to also pull up one more. This one right here. Okay, let me get them all three back up now. There we go. Okay. All right. So boom, see this one over here? Okay, did you see how it went way up there close to 100 really quick, right? Okay. And now what are these doing? Let's watch this one. This one's getting up there closer. Remember this one right here? Remember it was down at like, what, in the teens and like 20 something? But just in the last minute or two, we've jumped quite a bit, right? Now let's just watch it here as we get closer to expiration. Notice this one over here, boom, there's nothing even on the side. You can't even buy it, right? Again, at expiration, a binary has to be worth either 0 or 100, okay? So the closer you get to expiration, in the background, I want you to watch this one right here at 15 and 20, 11 and 20, 9 and 15, 4 and 15, 2 and 13. Watch how this one goes down. Okay, so when a binary contract is getting close to expiration and it's in the money, boom, gets towards 100 real quick. Boom, gets towards 100 real quick. Right? A lot quicker. And then boom, where did this one just get to that was out of the money? We still have a minute to go. It went boom, real close to 0 really quickly, right? Did you see that one? Remember that one I was talking about was going down? Watch this one here. It's 7 and 20, 5 and 17, 4 and 17. It's getting closer and closer to 0. These here are getting closer to 100. This one that's right close to the strike, 65, 656, 655.8, is real close to the strike. That one's kind of straggling, right? Because it's still right on the fence. Okay, at expiration, just one tick, right? Just 1 point, one way or the other, can make the whole difference of 0 to 100. Now that we're getting real close to expiration and it just a little above the strike price, boom, shot close to 100. You see that? Okay, so that was just a little bit of an example there that I wanted you to see how an in-the-money contract, okay, closer to expiration there has to go up towards 100, right? An out-of-the-money contract that's not reaching the strike price is going faster and quicker towards 0. Okay, did you notice how the market was going up this whole time? Okay, as we were talking about this, the market was going up, right? Did you notice that? Okay, because remember even a second ago we were talking about this one being at 655 and now it's at 663. Did everybody see that? Can I get a show of hands? Can everybody respond? Did everybody see how the market was going up? Even that, this one that I had originally shown you here that was like at 30 bucks, boom, went up to 100, right? These others are in the money, boom, went up to 100, right? So in general, what was the market doing? The market was going up, right? So what happens a lot of times, especially if you're new to binaries and may not quite understand binaries, you say, okay, the market's going up. So when the market's going up, what does that mean I do? Do I buy or do I sell? Well, you think you want to buy, right? So market's going up, I want to buy. Okay, well, let me open this and let me say I want to buy this one. Ooh, max loss 78, max profit 21. I'm going to risk 78 to make 21. I don't like that. What about this one up here? All right, if I want to buy this one, oh, I only got to risk $13 to make 87. And boom, I want to do that. I mean, the market's going up. I was on that webinar. I watched some of those other webinars that taught me when the market's going up, you buy. So I'm just going to go in and I'm just going to buy, right? And that's what you do. Well, then what happens? Okay. What did we just see happen there? Now, I'm not saying you never want to buy a lower price binary, but on this example, we have 18 minutes until expiration, right? On the other example we were just looking at, we only had a few minutes to expiration. And remember that binary that we were looking at that was real low priced? What happened to the price? Was it going up towards 100? Or was it going down towards 0? On that last example, it was going down. It was going down towards 0. Oh, well, binaries don't work then. This is just, this doesn't work, because I know that when the market's going up, I buy and my price should go up. So why in the world was the market going up? I was right. My strategy or system, my charts and indicators told me the market's going up. I bought a binary. The price of the binary should have gone up. Why didn't it? These don't work. Okay? Well, let's talk about that for a little bit. Some of you that are veterans know the answer to that. Okay? But even some, I've talked to a lot of people that even have been trading for a while that just don't quite understand the importance of time. Okay? A lot of times when we think about binaries, we oversimplify them. In one sense, binaries are extremely simple. I mean, it doesn't get much more simple than, I don't understand binaries. Well, it's a statement. The Wall Street 30 will be greater than this price by 140. Yes, no. Pretty simple, right? But sometimes we oversimplify it to a yes or no, up or down. Oh, market's going up, we buy. And it should win. It should be profitable. If the market's going down, we sell, it should be profitable. It's that simple. It's yes or no. And so we get so focused on, since it's yes or no, up or down, my main thing I need to worry about is the market going up or down? And if I've determined the market is going up, then I should be good to go. That's all I have to worry about is the market going up? Any binary should work for me, right? Any of you guys been guilty of this, where you're like kicking yourself and you're frustrated because you're like, I called it right? I mean, we've all been in a trade saying, oh, the market's going up, let's buy, and then the market turns around, right? We've all had the market go against us. We can understand why a binary or future or Forex or spread, we can understand why that went against us when we determine the wrong direction of the market, right? But what we can't understand, or what really gets us, is just like the example we saw. The market was going up, and it went up like 6-7 ticks there just in a few minutes. Like just in a few minutes, it went up like 6-7 points. How did I lose on that binary? Okay. Anybody ever had that happen? Market's going up, so they bought, and the market kept going up. It's not like, hey, I bought it, it started to go up, and then it came down. It's like, no, the whole time I was in the trade, the market was going up. But the binary still expired at 0. Okay? And so what I'm trying to do, I know I'm going on and on, I need you to wrap your head around the fact that it's not just direction of the market. Yes, a binary is simple. It's just yes or no, above or below. That's simple. But it's more than just market direction, okay? Because you have to choose the right binary strike, okay? And yes, Sharon, exactly. Wise choice of strike is essential. Because what are we saying here? This one right here, this strike is 20,670. So we're saying that the market will expire above 670. Well, where is it at right now? Where's the indicative? It's at 672. So it's already above the strike price, right? Okay. What about this one down here? 662. The binary contract states that the market will expire above 662. Well, okay, 662, the market's at, indicative's at 674. It's quite a ways above it already, right? So, in the example we had earlier, this strike, where we were right close to the market, and these down here that were below the market, both expired in the money, right? They both shot towards 100, remember? But this one way up here, even right now, well, this might not be the greatest example. Let's pull over. Let's look at this one real quick. Let's take a look here. Okay, so right here, 1363.7. Well, it's already at 1363.9. So as long as the market keeps going up, even just a few ticks, that one would expire in the money. But if we wanted to buy this one up here, hey, the market's going up, so I want to buy this one. Well, this is 1365.7. The indicator is at 1363.6. So even if we're right and the market's going up, even if it goes up 10 points, 10 ticks between now and expiration, we buy it, we think it's going up, and we're like, that's great. Boom, it's going up a tick, going up a tick, going up a point, going up a point. We love this. It's going up. Great. But if it goes up 10, that'll get it to what? 64.6. I'm saying it's got to be above 65.7. So even though we see it going up, we buy, and we're watching it go up and up and up and up. But we're getting closer to expiration. The closer we're getting to expiration with just a few minutes left, especially, the less chance and the lower probability it's going to get to 100. The less chance it's even going to get to the strike price, which would be 50. So therefore, the price and value of it's pushing towards 0. So it's counteractive. It's what we call time decay. Does that make sense? The market's going in your direction up. But because you're so close to expiration, the probability is so low, the value of this binary is going down. So even though the market may be pushing up, your value is going down. Does everybody understand that? Okay. Everybody understand how that works and why you may have been frustrated in the past if you didn't understand that and you were choosing the wrong binaries. When you're choosing these binaries here that are way up there and low priced, you have to have something that lets you, that tells you or gives you an indication of the expected move of the market, that you're expecting it to go up that far. But it's not just about go up that far, because what happens if you're right? What if the market does get up to 1365.7? Your strategy or system telling you it's going that way, all your indicators turn, and it goes up, and it eventually gets up there, and you were 100% right. But it takes 20 minutes to get there, and you've only got 9 minutes till expiration. Okay? So, when you're new and you're starting off with no understanding of binaries, and then you get a grip on what a binary contract is, where it's a yes or no statement, true or false, it will expire above or it won't, I buy it or I sell it, worth 0 or 100, oh, I got it. I got binaries. Great. But there's a second step to it. The first step is, yes, you need to be able to determine the market condition. Is the market going up? Is the market going down? Is it a trending day or range-bound day? Okay, great. I've determined the market's going up. It's an uptrend day. Well, between now and my expiration, the market's going up, but how far up do I think it will go? If I think it's going to go way up, then maybe I do want one of these strikes way up here. If I think it's going to go up, but it's just going to kind of creep up slowly, Maybe I want an at the money binary. Well, right now this strike is 1364.2. The market's at 1364. I want to get that one and just let it creep on up to get above 0.2. Or maybe I'm not sure it's going to go up very much. I think it's going to go up, but it's going to go up real slow. Well, then maybe I want to get a binary that's down here at 63.2. And the market's at 63.8, and just let it slowly creep up. But as long as it stays above here, I'm good. Okay, now notice this one that we're talking about, if I think it's going to go way up, I can buy for $8. This one in here around 35.57. This one that's below the market's already above it. What am I paying for it there? 74. So I'm paying a little more for this one. And why is this one a little more? Why isn't it down here at 28? Well, because at expiration, a binary is worth what? 0 or 100. What's right in the middle between 0 and 100? 50, right? So when the strike, 63.7, is right close to where the current indicative is, 63.7, between the buy and the sell, the middle ground is going to be what? Around $50. And if the market hasn't reached my strike yet, those are going to be priced what? Under $50, closer, heading down towards 0. If the strike's above the current market, those are going to be priced higher, going towards 100. Because again, it's got to be 0 or 100, right? And I know I've said this before, but sometimes, you know, you can get very overwhelmed especially if you're new, when you go in and you look at a binary strike ladder. Okay, and you might come in here and be like, whoa, what is all this? All these different strikes and these different prices. What does this mean? Well, in your mind, what you want to do right away is draw a line and say, where's the indicative? 63.1. What's the closest binary to that? 63.4. Draw a line. Where is this pricing at? Pretty close to $50, right? So right in here is where the market is. These strikes that are down here, the market's already above them, they're going to be priced above 50, closer to 100. The ones that are below it are going to be priced down towards 0. Just imagine 0 up here and 100 right here and 50 right in the middle. Right, see that? 63.4, 63.4. Buy it for 57, sell it for 47, 50 is right in the middle. That's your 50 line. Does that make sense to everyone? How that works? And you've probably heard me talk about this before, but something you have to understand, okay, is when you look at a at a Nadex ticket here. In this example right here, the euro dollar is trading at 1.1165, okay? Well, the strike price is 1161. So you're saying that the euro dollar will expire above 1161. Well, it's already at 1165. So it's already above. It's already in the money. So as long as it stays in the money by 3 p.m., this would be a profitable trade, and the binary would be worth what? 0 or 100? Be worth 100. And the reason you're buying it for 75, that's a higher price you're buying it for, but it's a higher probability trade because it's already in the money. Okay? And something you've heard me talk about is the midpoint. All right? When it comes to binaries and options in general, but when it comes to binary options here, something you can look at, just the pricing model. I'm not talking about market condition, market direction, which way the market's going, just from a pricing model of where is the strike and where is the indicative currently at. That is what determines a binary's price. We just saw that right here, right? When the strike price is right close to the current price, well, it's kind of on the fence still. It could end up at 0. Could end up at 100. We don't know yet, so it's around 50. These that are already in the money are going towards 100. These that are out of the money going towards zero. They're priced. The price of that binary depends on where is the market compared to where is the strike. So it's, in a sense, a probability, okay? So if this particular contract right here, if you can buy it for $77.50 and you can sell it for $72.50, that's what you call bid offer spread, okay? This is what you can buy it for. This is what you can sell it for, okay? And you've got other traders that are, you know, putting contracts out there, you know, to buy or sell. You've got market makers, okay, that are putting contracts out there, meaning, you know, they'll say, hey, we'll sell to you for this price, we'll buy from you for this price, we'll sell to someone else for this price. They're the middle guy, right? And the difference between the bid-ask spread is what that market maker gets to keep, right? We'll buy for this or sell for that, just like any business does, right? Just like a car dealer does, like a furniture store does. They're making a market. They're saying, hey, we're offering a bunch of contracts. We'll buy for this amount, we'll sell for this amount, okay? And depending on, you know, the time of the day, depending on the movement of the markets, depending on the implied volatility, can also determine a little bit higher bid-ask spread. It can also determine a little bit different price of the binary. But in general, when you look at the midpoint, what I mean by that is I can buy it for this price, I can sell it for this price. That's the bid-ask spread. So what price is right in the middle? Well, if I add these two together and then divide it by 2 to come up with the middle point, that's 74.87. That means from a pricing probability standpoint, because this strike price is below the current market already, then there's a 74% chance that this binary will expire above the strike. Does that make sense? Did I lose anybody there? When you're looking at the buy and sell price, whatever price is in the middle, which in this example would be 74, there's a 74% chance that it will expire in the money, okay? So, that being said, let's take a look at something here. Let's go give you a live example of that. Let's take a look at these 20-minute binaries here, okay? And give it just a sec. Actually, that's going to take a minute to repopulate. Let's check these out right here. Okay. Joe says, what about the sell probability? It's the exact same thing. Okay. What that means, Joe, is in this example, okay, let's say, okay, I want to buy this contract. Well, that means if I buy it, it's in the money, right? From a buy standpoint, Joe, okay, this contract right here, the statement says the euro dollar will be greater than 11.61. It's already at 11.65. So it's already greater, right, Joe? So this contract, to buy it, is already in the money, right? And has a 74% chance of expiring in the money. That's why it's priced at about $77. That's why I'm paying a little more for it. That's why I'm paying a little closer to 100. I'm not getting it for 30 or for 50. Something I buy for 50 would be right in the middle, right? It'd be right at the strike. But this one's under it. I'm paying a little more for it. And the probability that it will expire above is 74%. Now, let's say I wanted to sell the contract. On the buy side, this is an in-the-money contract. But on the sell side, is this also an in-the-money contract or an out-of-the-money contract? If I sell it, what am I saying? I'm saying the statement is false. Because if I sell it, that means what? That means that the euro dollar, okay, the statement says the euro dollar will be greater than 11.61. If I sell it, I'm saying no, that statement's false. It won't happen. The market will be less than 1161. But where's the market? 1165 up here. So from the sell side, this is out of the money. The statement's not true yet, right? The market would have to come down. The statement's not yet true. From the buy side, the statement's already true. To be above 1161, it already is. So what does that mean, Joe? Well, that means that there's a 74% chance that the statement will, okay, put it this way. If it's a 74% chance that the statement will be true, it's a 74% chance that the statement won't be false, meaning it's only about a 25% probability that it will be false. Does that make sense, Joe, or did that confuse you more? Did I explain that clear for everyone? So what you have to realize is a contract that's in the money on a buy side is an out of the money contract on the sell side. Does that make sense? Let's look at a different example. In our talks here, what have we been saying? We've been saying that these real cheap ones up here are called what? Out of the money, right? Like if I open this contract to say, oh, I can buy it for only 21, that's out of the money, right? Because look, I'm saying the market has to be above 681, but it's only at 669. It's got to move a lot. But what if I'm going to sell it? What am I saying? I'm saying the market will expire less than 681. And it's already less. You see that? If a contract's in the money on the sell side, that means it's out of the money on the buy side. If it's in the money on the buy side, it's out of the money on the sell side. Make sense? Okay. So when we talk about things being a percentage of probability, look at this binary contract right here, 20,693. What is the probability, just based on pricing, what is the probability of this binary contract expiring in the money? What's the probability of it expiring above 693? Yeah, probably about like 3%. It's very low probability. Well, why? Well, look at the price, 20,693. Look at the market. It's at 20,670. So what you're saying, if you buy it, is that in the next 15 minutes, the market has to get way up here. See, right? It's here right now at 669. In 15 minutes, it's got to get all the way up here at 693. Do you think there's an 80% chance of that happening? Or more like a very low probability of that happening within that time? Right? What about this one? Okay, well, then I'll get a little closer. I'll buy this one because I only got to put up 18 bucks for it at 681. And I've got 14 minutes for it to get to 681. Okay, maybe not. Where's 681? Okay, well, there's a much higher chance for it to go from 670 to 681, right? Instead of going all the way up here. This is a lot better probability for it to just move that little bit, right? Much better probability. How much better? 3% compared to about 15%. That's a lot better, isn't it? It's a lot better probability, 3% to 15%. Okay. What about this one? I can sell it for 44, buy it for 48, about 50 bucks for it to be above 669. Well, where's the market? 665. So that's a much higher probability for it to just go up 4 points, right? I mean, look, I'm already getting back up here to 667, 668. So my strike price is right here where the market is currently. But I've got 15 minutes to expiration. What could happen? It could go up a couple ticks and be worth 100 at expiration. It could go down a little bit and be worth what? 0. But we don't know just yet. So right now, we don't know if it's 0 or 100, so where is it priced at? Right about 50 in the middle, because it's still 50-50. Do you guys see this? I'm showing this to you live. I'm trying to not just show you PowerPoints and slides and explain to you how they work. I'm showing you this live. You see it. So you understand why that's priced around 50, because it's 50-50. You guys see now why these over here were priced so low, because it's so high out there. What's the probability of this one? About 93%. Why? Well, because it's the strike is 657. Where is 657? It's right here. What's the probability that the market will expire above that? Pretty high probability, because it's already way above it, right? Does that make sense of why that's a probability? So do you see that there's a big difference in saying the market's going up, let me just buy any random binary that I want to? Well, the market went up. Why did that binary lose? These binaries don't work. Binaries are a fluke. Binaries are a scam. You see now? Do you get it? Okay. How it really does matter which one you get. Okay. But the second piece to that is, notice how I showed you how quick they move to expiration. Because again, it's not just about getting the right one. What if you had gotten this one right here? 20,669. Okay? Where is 20,669? Wait, I'm sorry, that was the wrong one. 20,681. Okay? 20,681. Okay? Say that's the one you wanted. And you thought the market was going to get up there. Because what's the market been doing? Okay, this is not a recommendation. I'm in no way saying the market's going to do this. I'm saying just, let's just imagine that you were thinking, well, the market's been going up and then pulling back, going up, pulling back, making a higher high, pulling back, making a higher high, pulling back. Now it's made a higher high, it's pulling back. My strategy and system support, everything's telling me it's going to go back up. So I had every reason in my own head at that time to think it's going to go back up. Let's just say imaginary. Again, that's not a trade recommendation in any way, okay? So let's say, well, I saw the market having some momentum go back up. That's the pattern it's been doing, so I expected it to go up. And maybe you had a good rhyme and reason behind that. And maybe here in a little while, you'll see that you were right. But are you going to be right within the next 8 minutes and 37 seconds? Maybe you will, maybe you won't. You see, what is the probability that it's going to get into the 680s in the next 8 minutes? for this to get into the 20,680s in the next 8 minutes, it's about 12%, right? Now, I want you to see something here, okay? Let me hold on real quick. I want you to see something. I'm going to take a shot of this, okay? So, for it to get into the 680s in the next 7 or 8 minutes, like 12, 13%. Now we're looking at the 20-minute binaries here. Well, or I'm sorry. Yeah. No, we're looking at the 2 PMs. So what I want to do, I'm going to refresh this, and we're going to pull up binaries, Wall Street 30. We're going to look at the 3 PMs. Okay. So, what was the probability of 681 in 7 minutes? Say 15%. Let's call it 15. Everybody agree to that? So to get into the 680s in the next 7 minutes, 15% probability. And we remember from looking at that strike ladder that this was an out-of-the-money binary. It was one of the ones up there at the top, low priced, right? Okay. What about the 3 p.m. expirations? What do we have? Oh, look at that. 20,681. Isn't that the same exact strike price as this right here? 20,681. But this one's priced at $18 with 7 minutes to go. The exact same strike, 20,681, with an hour and 6 minutes until expiration, is priced at what? $37. I can buy it for 37, sell it for 30. The mid price is about 34. So there's about a 34% probability here compared to a 15% probability here. Twice the probability. Everybody, that makes sense? Double the percentage of probability. Well, that makes no sense. It's the same strike. The market's going up. It's the same number. It's the same strike. Binaries are 0 or 100. Why aren't they priced the same? Why is one priced half the other? Why does one have twice the probability? Because there's an hour and 5 minutes for it to happen, which gives it a much higher probability. I mean, it's still only 30% compared to some of these at 80 or 70, right? But if your strategy or system is telling you, hey, I'm following certain patterns or whatever, and I think it's going to pop up, and I think it'll get above this strike. Well, do you want to limit yourself for that strike having to be hit in the next 7 minutes? Or would you maybe want to, and you only have an 18 or a 15% probability trade? Or if you're really dead set on the fact that it will get up there, are you better off maybe looking at giving yourself more time to be right? Instead of 7 minutes, an hour. Giving yourself more time to be right. Are you going to pay a little more for the binary? Sure. Instead of 17, you're going to pay 37. But you're also getting a 30-something% probability instead of a 15. You're paying a little more for it, but you're paying to ensure a little bit higher percentage of probability, right? And let's say you just chose to do this one instead. Hey, this one's already 645. The market's up here at 659. I think the market's going up anyway. You know, I mean, I think it's going up here anyway. So why don't I just get one that's down here? I don't have to worry about how long it takes to move up or if it gets up there by a certain time. I'll just get one down here. That kind of gives me even more what? Insurance. That gives me an even better probability. And therefore, I'm paying a little higher price for the binary for that probability. Okay? Guys, I was glad we were able to find that example, okay? Because I think that's powerful for you to see, especially if you're new, of the same price, 681, with only a few minutes to expiration, is priced one way. The same, literal same exact price, 681, with an hour to go. I'm sorry, 681 with an hour to go. Well, it's actually priced different now because the market's moving, right? Let's also now look at, well, we don't have, looks at a daily. Look at a daily between 690 and 670. See that? Even further out to expiration, you've got some different prices close to that. So not what I'm trying to get across to you is that it's not, when it comes to binaries, it's not just about the movement of the market or direction of the market. It's also about where is the location of your strike price. Which strike did you choose? Is the market going up? Is the market going down? All right, you know the market's right here, 659, 657, about 50 bucks. Okay, is the market going up or down? Do you want to get a binary that requires the market to get up to it? Do you want to get a binary that's already under the market? So it's not just about direction of the market up or down, it's location of what strike you chose. Then from there, it's about how long did you give yourself to be right? Because time affects the price of a binary. Okay, just a couple little examples here. Let's say this was the euro dollar. All right, and the euro dollar contract said it'd be greater than 25.40. Okay, well, this line is 25.40. Well, let's say we bought it when the market was right here above 25.40. Let's say we bought it for 58. Then the market comes down below it. Well, now it's worth less than 50 because it's under the strike price. Now it's only worth 42 or 46. We get a little closer to expiration and it's still under the strike. Now it's gone from 46 down to 38. But then when it comes back up here and it's around the strike price, what do you think it's worth? When the contract that we bought, the market's right at the same level as the contract we bought. When it was down here, it was about 38. When it's up here, right at the strike price, it's going to be about 50, right? Let's say the market gets up here and it goes above the strike price. It's going to get priced closer to what? Closer to 100 bucks. Okay, so it's priced around 76. But then what happens when it comes down here below the strike price again? It's only worth 26. Now, wait a minute. You say, wait a minute, John, this makes no sense. Because the market was a lot further away from the strike down here, but it was still worth 46 or 38. How come when it comes down here, not even as low, that it still went down in value? Because even though it's not as far below the strike as down here, you're getting what? Closer to expiration. Does that make sense? When the market dips below the strike here, it may still be worth 46. Got a little time past you when it dips below the strike here, it's about 38. But when you're getting closer to expiration and it dips below, it's going to start heading down to zero quicker because the probability is getting less with your time decay. Does that make sense? Okay. All right. So, guys, I hope that was helpful for you there, and hope that gives you a little bit of understanding of just taking the next step. If you have down the basics of a binary, you understand what a binary contract is, that it's yes or no, 0 or 1 at 100. That is great for you to know. And I know a lot of people just get focused on buy or sell, market up or down, and that's it. And you have to also make sure that you pay attention to the location of your strike. How far is your strike price from the market? And then how much time am I giving myself to be right? Okay, because we've all had the market turn against us and go the other way, but I can't tell you how many times I was right. The market went right where I thought it was going to go. I just needed a little more time to be right. So you have to make sure to incorporate those different things into your binary trading. And like I said, we're kind of building here. Next time, we're going to talk a little bit about how to use this Nadex strike ladder on the Nadex platform to manage your trades and shoot for potential profit targets. Talk about how to incorporate it into some of your strategies of different indicators you might use, or deviation levels, support and resistance levels, expected moves of the market, and how to use this strike ladder to determine what the price of the binary will be and a dollar amount on a profit target. We'll talk a little bit about how to manage the trades, when to exit early, how to set take profit orders, and so on. So make sure to join us next time and on the next couple webinars here as we kind of build on top of this. And thank you once again for being on the webinar with us, and thank you once again for your participation on subject matters. We will get those on the list and look them over here. Okay, guys, we went a little bit long today, but I hope that was helpful, and I'm glad we had some good live examples there to show you, not just some slides and basic boring teaching, but to show you live on the chart that what I'm telling you actually is the case. It actually does work. You actually can understand the pricing as probability and percentages and see it yourself, okay? So thanks a lot, guys. We will join you. We look forward to joining us next time, and have a great rest of your trading day and a great trading week. We will see you next time. Thank you very much, guys. I appreciate the feedback, and you're very welcome. Thank you, Craig, and thank you, Marion. All right, guys, have a great one.